Good morning. This is Horizon's Middle East and Africa, our top stories this morning. The U.S. says direct talks have taken place with the rebel group that took power in Syria to discuss its political transition. South Korea's currency and stocks a little changed today after President Yoon's impeachment, suggesting investors are worried the turmoil is not over yet. We'll be live in Seoul with the latest. Plus, China's retail sales posting a surprise slowdown in November, rising just 3% on the year, well below economists' forecasts. It is highlighting the urgency for Beijing to find ways to get people spending. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, getting closer and closer to the end of the year. But we've still got a very busy week to get through in terms of central bank meetings. All eyes are going to be on the Fed decision coming up later this week. The expectation is that they will cut for 25 basis points, but will also combine that with an upward revision of the dots for next year. So some people talking about a hawkish cut as a likelihood out of the Fed this week. We also get rate decisions out of the Bank of Japan, out of Bank of England, Riksbank, Norges Bank. So really heavy central bank week. In addition to the data drop that we got from China overnight, driving some of the sentiment in the market. Plus, remember, late on Friday, we had that downgrade come through from Moody's on the French credit outlook and ratings. So that is something to bear in mind as well as we look through all of the drivers for market price action today. But futures not doing a whole lot. On Friday, the close was pretty much flat. Today, leaning slightly towards the green, up about 7 basis points. 10-year yields, 1 basis point higher today. A lot of focus on what's been happening with yields. We are about 20 basis points higher over the course of last week. So massive upward move in terms of where 10-year yields are trading, but also the curve. The curve has steepened quite a lot as well as we talk about the re-rating and repricing of yields that's going on. Asia Pacific, this is the handover today, down 0.3%. And here, this is a reflection of the weak retail sales numbers that have come through from China. 3% growth versus 5% expectations. On the back of that, once more, the market is asking for more stimulus out of the Chinese authorities. So the reaction and the handover has been negative there. And then Bitcoin, once again in focus, up 1.6% today. Another all-time record high for the cryptocurrency. The latest catalyst being the fact that NASDAQ have announced that MicroStrategy, which is essentially a software firm that has taken a leveraged bet on Bitcoin, is now going to be included in the NASDAQ index. Yet another positive catalyst for Bitcoin. As for our terminal chart today, well, I kicked off the show talking about the Fed meeting and all eyes on those dots. Well, this is what the market is pricing in as far as interest rate cuts are concerned. A little less than 3 cuts are priced in for 2025. So we're sitting at around 65 basis points that are priced in. 75 obviously indicates 3 cuts priced in. So whether or not that changes on the back of that Fed meeting will be interesting to see, because they will most certainly revise upwards how many cuts are priced in for next year. But the guidance and the tone is going to be key for market direction as well. Now, on to geopolitics. U.S. Secretary of State Antony Blinken says direct talks have taken place with the rebel group that took power in Syria. Blinken says U.S. officials spoke directly with Hayat Tahrir al-Sham, as well as other groups, on a set of principles the U.S. and Arab partners want to guide Syria's political transition. Meanwhile, Syrian rebel leader Ahmed al-Shara and the UN Special Envoy for Syria have also discussed reconsidering a 2015 Security Council resolution outlining a roadmap for the country's political transition. So for more, let's bring in Honor Ant, Bloomberg's managing editor for the Middle East and North Africa. So Honor, really interesting that the Secretary of State, Antony Blinken, actually had direct talks with the leaders of Hayat Tahrir al-Sham, Ahmed al-Shara, but they've also discussed a roadmap for the political transition. What do we know about that roadmap? What does it include?
So, Blinken's attitude, or the U.S. attitude in general, to Syria has been somewhat signaled beforehand by the G7 endorsement, call it that, or support for the new government in Syria just about a week ago. What we know right now is that both the U.S. and the rest of the developed nations, as well as some Arab countries in the region and Turkey, are trying to push Syria's political transition in a way that will result in a government that will protect minorities, non-Muslims, and other minority groups from any violence or repression. And second, everybody wants to see a Syria that will not be used as a launch pad for attacks on other countries by armed groups residing there. Obviously, from the likes of Israel, that's any Iran-backed militia, and for Turkey, That's mainly Syrian Kurdish forces such as the YPG.
Yeah. Honor, perhaps on a different tact, I thought it was interesting that Turkey over the weekend are suggesting that they've come to an agreement with the rebel government about dismantling Kurdish military forces. Now, we know for a long time this has been a focus of the Turkish government, of President Erdogan, restraining some of the perhaps nationalistic sentiments up in the northeastern part of the country. How likely is it that this actually leads to a full dismantling of those forces, or is it just a hopeful expression of sentiment from the Turkish side?
Well, it could be both. What is clear is that this is clearly part of the same issue that we've just spoken about. Countries around Syria have an interest in its future, and they want to protect those interests. For Turkey, the first and foremost interest is to make sure that SDF is far away, YPG is far away from its borders, especially in the northeastern part of Syria. They have said that they have come to a conclusion with Syria, or the transitional government in Syria, but it's unclear if that decision will belong to the transitional government in Syria alone. Syrian Kurdish forces themselves have a say in it. The US has been supporting those groups since 2015, and they think they are critical in keeping IS at bay in Syria. So there are a lot of decision makers. Yes, Turkey has been pushing for it, and to convince the US to agree its terms in terms of what happens to YPG and SDF in the future, Turkey has been basically offering to help fight ISIS inside Syria on its own, basically take over the responsibilities that are currently supposedly held by the like of SDF and YPG. Is that going to happen? Well, if there will be any change under Mr. Trump in the US, obviously that's going to be in Turkey's favor. So yeah, Turkey is very hopeful that it might happen, and they've already signaled that they have come to an understanding with the new Syrian government about the need to abolish the Kurdish forces in Syria.
Yeah. Honor, very clear. Thank you. Honor and Bloomberg's managing editor for the Middle East and North Africa. Now, South Korea's stocks gave back early gains following a vote to impeach President Yoon Suk Yeol. Investors shifted focus away from politics and back to the broad economic worries that have plagued the market. For more, Bloomberg's Asia Trade co-anchor Sherry-Ann joins us now from Seoul. Sherry, before we talk about the market reaction, I do just want to point out just politically the political process here. The decision now lies with the Constitutional Court. Is there any possibility at all that they shoot down this impeachment motion?
This is a constitutional court, Jumana, that has done both in the past. It impeached and upheld the decision of President Park Geun-hye to be removed in 2016. But in 2004, President Roh Moo-hyun, that decision to impeach him was overturned, and he was actually restored to power. So right now there's a lot of uncertainty, and President Yoon doesn't seem to be backing down. He said that he will never give up. He comes from a career as a prosecutor, so he seems to be confident to be able to fight this. At the same time, local media and analysts are saying that his declaration of martial law broadcast on television is pretty clear evidence that he needs to be punished and that he needs to be impeached. But you can see behind me right now, there are protesters still turning out in force on the streets. Over the weekend, we had at the National Assembly thousands gathered and celebrating the impeachment of President Yoon. Over this morning, a little bit more calm here in Gwanghwamun in central Seoul, but you have various different groups coming out with different social causes trying to advance their message. This morning, we had pro-women associations coming out saying that they want the next administration to be more feminist. Right now, we're seeing another group protesting Yoon Suk Yeol's energy policy. So you can see how divided and how heated up society right now is in Korea. So I'm not really surprised that some of those gains in the markets that we saw earlier today have now faded.
Yeah, well, I was going to bring it back to the markets. Again, it feels like it's been a bit of a roller coaster ride for the Korean won. We actually opened up lower, rebounded now about 0.4% firmer. My question is this the market looking past some of the political turmoil over the past couple of weeks, or is it just a function of the central bank once more coming into the market to reassure investors that they're going to be there to support liquidity?
We have to say, really, when it comes to financial authorities, they have been pretty proactive since this political crisis started. We have heard from the Bank of Korea several times. Even over this weekend, they released a statement saying that they will do whatever is needed in order to support the economy. This morning, we heard from the Korea Exchange, other authorities also talking about monitoring the financial markets 24 hours. It seems a lot of it was already priced in over the weekend that this impeachment would happen. We've heard from analysts that once the shock wears off, we could potentially see the Korean won returning to that 1400 level against the US dollar. But the fact remains that when it comes to optimism about the Korean market, it was already starting to fade in the past few months. We've seen outflows for the past 4 months. We have seen slowing down of exports. Of course, Korea is an export powerhouse. We've seen doubts about the chip industry, about demand out there. And of course, with potential tariffs, with an incoming Trump administration, that could be a problem as well.
Yeah, and a whole other catalyst to consider next year as well, beyond the domestic political events. Bloomberg Syrian in Seoul, thank you so much for the reporting. Now, still ahead, hear why InTouch Capital Markets expects the Fed will deliver a more hawkish cut on Wednesday. More on their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Chinese shares fell, weighing on broader Asian equities after weaker than expected retail sales data showed the world's second biggest economy still struggling to recover. Meanwhile, traders are also looking ahead to the Fed's interest rate decision, with markets anticipating a cut on Wednesday. Let's bring in Sean Callow, Senior FX Analyst at InTouch Capital Markets. Let's talk about the main event for the week, even though there are lots of other side events going on. But let's start with the Fed. On Wednesday, the markets are scoring in on a 25 basis point cut and an expectation that there will be an upward revision to the dots for next year. My question for you is, what would constitute a hawkish surprise, given the market is already pricing in perhaps a little less than 3 rate cuts for all of the calendar year in 2025?
Yes, I think it would have to be about the language that Powell uses, particularly around January. Maybe there's something in the formal statement itself that could be tweaked, some language suggesting, maybe not quite meeting by meeting. I think it's too soon for that, for sure. But just an indication that the default probably should no longer be just a cut at every meeting. So as I say, probably the press conference, it could be something in the forecast. The dots are very scattered, remember, so we do focus on the median, but the actual forecast that the Fed members are putting in themselves are all over the place, really. So it's not a very stable median. So you could get some headline risk there, but for sure, all the reporters will be getting him to say something catchy about January, and it might be that he's happy to use the word pause if data warrants it.
Yeah. And I've seen some analysts, notably Goldman Sachs, for example, overnight have taken out their forecast of a January cut. You say that reporters are going to press the Fed Chair Jerome Powell to give more insight as to the upcoming meetings, but I do wonder whether the conversation around neutral rates is relevant at all to market pricing, market expectations. At the ECB last week, the ECB president, Christine Lagarde, fielded a lot of questions about neutral rates, and she didn't want to get involved in that discussion. How likely is it to be a feature of this upcoming Fed?
Yeah, I think it's probably unavoidable, given that the FOMC members all submit their long-term forecast to the dot. So it's every quarter we get them, they give an idea of where they think that might be. That still have a 2 handle. Is it closer to 3? So yeah, central bankers tend to like to say that they know neutral when they get there and that sort of thing. So they don't like to be pinned down. And of course, they make the point that it does change. So where neutral monetary policy is may depend on, for instance, how loose fiscal policy is next year under the new administration. So he'll be dodging quite a few of those questions, I think.
Yeah. Let's take it back to FX markets. The DXY index has rallied for 10 out of the past 11 weeks. Is it looking a bit tired?
Look, it's holding up pretty well. I suppose you'd say the price action is quite good for the time being. But DXY in particular, you do have to watch out because it is very heavy on the euro. And I think that in terms of the pressure on any pressure on the euro from, say, the French fiscal crisis, that's like the dog that didn't bark, because really there's not much sign of it there. That's a story for the bond market potentially, and you could just maybe there's just money being switched out of French bonds, but just into elsewhere into the euro without selling the euro itself. So I think the euro is holding up okay. That positioning up when you've got that sort of momentum on the dollar, it does raise questions going into maybe not necessarily this week, but around year end, you do get positions that and trades that are super popular can get into a bit of trouble around the turn of the year. So I'd be very wary of the US dollar, maybe running out of steam around the year end, and seeing whether it's really justified in them continuing to be so strong.
Yeah, well, there's been a big downtrade with the euro, with the pound. Let me just turn to the yen as well, because the Bank of Japan is in focus this week. And the market is now only pricing in 4 basis points out of a potential 25 basis point interest rate hike. So market expectations have once again shifted for the Bank of Japan. Why do you think that is the case?
Yeah, it just seems to be, we're talking about the media before, there seem to be some informed people in the press with indications using sources and so on. So we've had multiple anonymous source stories in the past couple of weeks indicating that the Bank of Japan doesn't see any great risk by holding steady at this meeting. So I think that's probably the guidance that's been there. Governor Ueda has said publicly that he doesn't really want to commit one way or the other, and that he didn't seem to be concerned about the prospect of acting at this meeting. So they'll have a discussion, but they don't have new forecasts, for instance. And so I think perhaps a bit of caution here, and whether they get much clarity at their next meeting at the end of January, in terms of how the trade situation is going to be, I don't know if they'll have enough guidance from the new administration in the US, whether that's going to be a factor for them. But obviously they are heading towards gradual easing. So it does look as though it's a steady hand for now, and that's very difficult for the yen. So I think the risks are towards 155.
Yeah. And let me just round up with a question on the China data drop that came this morning. Disappointment on the retail sales side. We've seen Chinese bond yields make another record low. How do you read this all going into next year?
Yeah, that is a real disappointment on the retail side. So, of course, it jumps around month to month, but there's no way that if you're really trying to stoke consumer spending, then you can be satisfied with a 3% annual growth in retail sales. The industrial production obviously was a lot better, but we heard it from the officials as they were discussing the statistics that they do know that there's more to be done in terms of supporting consumption. So what we've seen recently has been more tinkering around the edges, and we will see whether the change in rhetoric from the officials in the past few weeks does amount to much in terms of really stoking the consumer, because for the time being they seem very domestically oriented, externally oriented.
Yeah, fair point. Sean, a pleasure to chat to you. Thank you so much for coming on our show. Sean Callow, Senior FX Analyst at InTouch Capital Markets. Coming up, well, not shopping. China's retail sales growth unexpectedly weakened last month. All the details on that mess coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. China's retail sales growth unexpectedly weakened last month, highlighting the urgency for Beijing to further encourage residents to spend. Retail sales rose 3% from a year ago, significantly below forecasts for 5% growth. Industrial output increased in line with estimates, and over the weekend, a PBOC official told state media that China will cut interest rates and the reserve requirement ratio in a timely manner next year. And key Chinese economic meetings this month have revealed that officials are planning to make stimulating demand and consumption their top priority in 2025. That will be welcome news for luxury brands who've seen sales slide and fortunes fade as shoppers tighten their belts. More from our China correspondent, Min Lo.
This 5-story Louis Vuitton flagship store in Beijing was supposed to open its doors to shoppers in early 2024. LVMH CEO Bernard Arnault told Bloomberg he was optimistic about the group's growth in its largest market.
I am always optimistic, and the people have often concerns which are not materialized.
But now, sources say the store may not open until as late as next year. The slow progress is symbolic of the challenges European luxury brands face in China. LVMH shares have plummeted since the start of 2024, revealing the scale of the slump in demand from Chinese consumers. Another luxury group, Kering, warned that its annual profit will fall to the lowest level since 2016 due to weak Chinese demand for designer bags and clothes. Prestigious watch brands like Richemont, the group behind Vacheron Constantin and IWC, and Swatch Group, owner of Omega, are also affected. Swatch shares tumbled this year after sales in China, which account for about a third of its revenue, fell sharply.
Many watch manufacturers are really dependent on China, generating 40–50% of their sales.
This pullback in lavish spending is hitting some of the world's richest. LVMH CEO Bernard Arnault's fortune tumbled from the top spot in the Bloomberg Billionaires Index. Founder of Kering, François Pinault, fell out of the global 100 richest. Shoppers in the world's second-largest economy are shying away from excess buying as Beijing grapples with low domestic consumption and a shaky property market. President Xi Jinping's government has rolled out a series of stimulus measures to boost sentiment. Bloomberg Intelligence says China's luxury goods sales and the downturn in the industry may reverse in the second half of 2025 if Beijing continues to roll out economic support. Min Lo, Bloomberg News, Hong Kong.
Well, pretty timely package there from our colleague Min Lo, talking about the efforts to shore up the consumption part of the Chinese economy going into next year. And obviously, that's going to have ramifications on the luxury sector. This morning, the handover has been pretty negative, though, from Asian equities, Chinese equities not really knowing how to react to the disappointment that's come through on the retail sales numbers, albeit we're coming from a point of a massive rebound over the course of the last couple of months. This is the picture for other futures, though. S&P not doing a whole lot, leaning towards the green as we head into the Fed meeting on Wednesday. Today, we're going to have some PMI manufacturing numbers to watch out for. And then Eurostoxx futures not doing a lot as well as we talk about the downgrade that came through on Friday evening for the French credit rating. So we'll talk more about that in the second half of the show. Now, coming up, the Democratic Republic of Congo says peace talks with Rwanda to end an insurgency in Congo's east have collapsed. All the details on that story next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Israel's cabinet approves a plan to double the population in the occupied Golan Heights. Qatar, Saudi Arabia, and the UAE voice their condemnation. Peace talks in Angola between the DRC and Rwanda collapse over disagreements on negotiating with the M23 rebel group. And Moody's cuts France's credit rating, citing financial weakness and political gridlock. That as new French Prime Minister François Bayrou is set to meet with far-right leader Marine Le Pen later today. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jemana Bersachi in Dubai. Final week of the trading year, well, almost, as we talk about a lot of central bank meetings coming up. Fed, the focus on Wednesday. Bank of England, some of the Scandi banks on Thursday. Bank of Japan also to watch out for as well. So plenty of events to get through this week. Today, we've got the S&P futures leaning towards the green after a sort of subdued end to the week last week, even though we're very close to all-time record highs for the S&P. 10-year yields in focus focus. We are just sitting shy of about 4.4%. Massive move upwards in yields over the course of the last week, up 20 basis points or so. So that has been a big focus for market participants, and what we're seeing, sort of the repricing of yields to reflect perhaps cautiousness coming through from the central banking community vis-a-vis rate cuts next year. Today, the handover from Asia Pacific is leaning towards negative, down about 0.25%, and most of that has been led by the Hang Seng and the Chinese equities after that disappointing retail sales print came through 3% year-on-year versus expectation of 5%. It just really serves to underscore the challenges facing the Chinese economy into 2025. I should mention the Shanghai index has rebounded 30% from the lows reached in September. So we're coming off a very strong couple of months there. And then Bitcoin, everyone's favorite cryptocurrency, up 1.8% today, another all-time record high for the cryptocurrency. This on news that MicroStrategy is going to be entering into the NASDAQ index. So another bullish signal, I guess, for the cryptocurrency community. As for our terminal chart this hour, and here I just want to highlight some of the volatility that is being priced into euro currency as we get into what could be quite a significant week. We talked about the Moody's downgrade of French sovereign debt coming through late on Friday. Also, the appointment of a new prime minister there. In addition to some of the woes setting back Germany, snap confidence vote is going to be held today, which Scholz is likely to lose, which means we will be staring at another general election in February of next year. So all of that to come this week, and it tells you that 1 week volatility is trading at a premium to the 2 weeks on back of some of these drivers that could take place this week. Now back to this part of the world. Israel's cabinet has approved a plan to encourage demographic growth in the occupied Golan Heights. Prime Minister Netanyahu's office says the plan to double the Golan Heights population comes in light of the war and the new front against Syria. It's been condemned by Saudi Arabia, Qatar, and the UAE, who say it could escalate regional tensions. Israel's Defense Minister Israel Katz says recent developments in Syria are increasing the intensity of the threat against Israel. And security forces of the Palestinian government, led by President Mahmoud Abbas, have carried out rare and lethal attacks against militants in the West Bank. The 11-day Palestinian Authority operation targeting Hamas and Islamic Jihad fighters was only confirmed this weekend. The PA says the raids have prevented imminent car bombings and other attacks. And the Democratic Republic of Congo says peace talks with Rwanda to end an insurgency in Congo's east have collapsed. The talks, scheduled for yesterday, fell apart after Congo rejected a Rwandan demand that it negotiate directly with the rebel group known as M23. Let's get more with our Africa correspondent, Jennifer Sabazaja. Just bring us up to speed on the talks that took place and why they ultimately failed, Jennifer.
Right, Jumana, this is seen as a significant blow to diplomatic efforts. We've seen a lot of authorities globally, even the West and the Biden administration, really try to push for these talks to happen, for some sort of peace negotiations to happen. And so this was really seen as an opportunity, especially for Angola, who was trying to be at least a mediator in the situation. But from our understanding, it fell apart, as you were mentioning, because of the dispute about the M23 rebel group. Now, from our understanding, the draft agreement apparently included negotiations that were to have M23 a part of it, something that Rwanda said was contingent on any peace talks. And Congo, for their part, had said no, they do not want to actually have those talks. They've seen the M23 as a militant rebel group authority. They've accused Rwanda and Uganda, for that matter, of backing the rebel group. And so that's really, it seems like, where the talks seem to have fallen apart. From our understanding, it didn't even look like President Paul Kagame of Rwanda even made it to Angola. So instead, what we got was a bilateral meeting between the president of DRC, which is Felix Tshisekedi, and Angolan President Lourenço. And really, this, again, is a significant blow. We've seen conflict in the region continuing on for close to 3 decades. We've seen millions of people displaced. We've seen a number of foreign actors try to at least get involved in at least decreasing a lot of the increased military action and insurgency that we've seen increase over the past few years. And so now the question is, where does this go from? And if M23 is really what is on the table to even get talks going, will we even see these leaders meeting? And potentially then, what is the next step for some of the mediators in a part of these discussions?
Yeah, you cite the war that's been going on for several decades now. Angola is clearly making an attempt to mediate, but DRC saying that they don't want to have any contact at all with M23. So it feels as though we're at somewhat of a political impasse, Jen. Where do we go from here?
Right. The big question, Jumana, and I know we talk about this with a lot of our stories, I wonder really how the U.S. is going to potentially get involved. As I mentioned, under the Biden administration, there was a lot more of a push to resolve the conflict and the issues that we were seeing in the region, so much so that we even had the UN and other agencies involved saying that they would be a part of at least surveilling this area and trying to bring this to a resolution. So now with the Biden administration leaving and potentially, the Trump administration coming in very much with a stance that he does not want the U.S. to get involved in external matters, what happens then? And it's not just the M23 that has been a part of the fighting here. We've seen a number of other militant groups that have also been a part of the fighting here. And that has continued despite any sort of cease negotiations that have been agreed to earlier in the year. And so I wonder now whether or not these leaders will be able to meet, whether Angolan President Lorenzo will be able to get them to sit down, and then what are the contingencies for both sides, and whether or not the U.S. or the UN will get involved. There's also the humanitarian situation, as I mentioned, millions of people displaced. Earlier this year, I was speaking to the Angolan foreign minister. 60% of arable land on the continent exists in this area. So this is an economic opportunity that is really on the table because of a lot of the conflict that we are seeing there. So a lot hangs on the resolution of this, and a lot of these different actors and stakeholders need to come to the table and agree to some sort of way to move forward.
Yeah, I mean, it's a huge story. It is one of the world's largest humanitarian crises. To your point, I was reading that there are 7 million displaced on the back of this conflict. 7 million. And to put that into context, we speak about the displaced coming from Syria, and that number is 6.5 million, so even more than the number of Syrian people that have been displaced as well. Our Africa correspondent, Jennifer Zavazaja, thank you. We'll circle back to you next hour. Now, coming up, are Middle Eastern IPOs losing their sheen? We discuss the recent spate of disappointing debuts in our Mideast Money segment next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Let's turn to the topic of listings in this region, which has seen some blockbuster IPOs in the last couple of years. It's become par for the course to see order books that are double, if not triple, digit oversubscribed. Take Talabat, Parkin, and Spinneys, for example. But recently, there seems to be a disconnect between demand and debut, with the performance disappointing. Samir Lakhani is Managing Director at Global Capital Partners and joins us now for more. I've listed several examples of companies that were coming to the market, listing, IPO, a lot of excitement behind them. Books were oversubscribed, and then the stock just didn't perform well in secondary. Why do you think that has been the case?
Well, there's been a little bit of a disconnect between the level of oversubscription and the subsequent price activity. If you drill down, the difference has been primarily bifurcated between some of the private sector enterprises and the state-owned privatizations. Some of the companies that you mentioned, for example, Parkin or Salik, they've done very well in the secondary market, having been oversubscribed. And then you get to the private sector companies like Lulu or the most recently announced Talabat. There, the performance has been disappointing, and in a nutshell, it's because of valuations, right? Private sector companies have been caught in this valuation creep. They try to get the most bang for the buck for their issuers, and investors over here have become increasingly savvy to and sensitive to what the valuations are, and I think that explains part of the reason why we've seen a little bit of a muted response in some of these IPOs.
But the books tend to be very oversubscribed, and so that doesn't seem to be a real representation of what actual demand is then.
Well, I don't think that's true, right? So we have the IPOs that are being predominantly oversubscribed by institutional investors, and they're in it for the long term. Right? And then you have the kind of the retail tranche where you have a little bit of speculation going on. There's investors that are borrowing from the banks, leveraging from the banks so that they can make a quick bang for the buck, and that happens in any market. The institutional investors come in with a lock-in period. Typically, it's about 6 months, and so really what you see is this kind of gyrational price activity in the first few weeks and months before the institutional activity takes over.
Have you seen more demands come through from international investors?
Oh, yes, absolutely. International investors like Vanguard have already come in. There are other investors that have expressed an interest. I think most recently in Abu Dhabi Finance Week, you had BlackRock and Blackstone both expressing their desire to become cornerstone investors. And you'll see more of that as we see capital markets deepening.
I wonder if those private companies that you mentioned, the ones that perhaps thinking about listing in 2025, are going to take the lessons on board from 2024 and perhaps be more cautious, conservative with the valuations.
I think they will. Remember, I mean, it's been an incredibly short period. Just immediately before COVID, I think Bloomberg was one of the companies or one of the publications that announced that the demise of the UAE capital markets is not very far off. And then the state embarks on this massive privatization program. And 3 years later, we've seen about 27, 28 odd listings in the UAE, more than 150 in the region. So it's an exciting time for capital markets, but it takes time for the ecosystem to grow.
Maybe our report was the catalyst the government needed then. We gave them a little nudge.
Probably.
How do you see the outlook for next year?
Look, we're running into a few headwinds, right? There's still some concern about inflation. I think there's some concern about Western equity markets being a little too overvalued. So I think it's going to be a little bit more muted. But that being said, it's all about the valuations and it's all about the business model. And investors are showing that they're being very savvy in how they comprehend both.
What about regional competition? You've got competing hubs. You've got various countries around the GCC also wanting to build on their own capital markets. I just wonder whether there is enough investor appetite to feed all of those markets simultaneously.
There's competition, to be sure, but thus far, market activity indicates that there is plenty of liquidity. I mean, the oversubscription levels that you're talking about, we've seen the same in Oman, we've seen the same in Saudi. Saudi has been the most prolific in terms of the number of IPOs that they've launched, and they show no signs of slowing down. Neither does the UAE, by the way. But I think as far as liquidity levels are concerned, thus far, I don't think that's been a problem.
So just to round up the discussion, bring back to what you were saying about sort of the valuation discrepancy between private companies and those that are state-owned or have some form of state involvement in them. To what extent do you think is the listing of some of these state-owned companies going to set the tone for overall listings next year?
Look, state-owned assets or state-owned privatization-driven programs are always going to be more favored because for the most part they operate in monopolistic or near monopolistic market. The private sector operates in a much more competitive sphere. That being said, we've had private sector offerings like Talim that have opened below their IPO price and since then have risen. So it's early days yet, but there's no doubt that state-owned privatizations will lead the fray.
Yeah, so interesting. Really good to have you on and to listen to your perspectives. Samir Lakhani, who was just telling me he's been in Dubai for 40 years, so knows quite a little bit about this region, Managing Director at Global Capital Partners. Well, for more of these stories, looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Morgan Stanley's chief U.S. equity strategist says he thinks the S&P 500 is on course for 6,500 by the end of next year from its current level just above 6,000 or 6,050. Mike Wilson spoke to Katie Griefeld and Mark Miller.
We've had a lot of good things that have happened over the course of like the last 3 or 4 months. So I would argue the markets have traded that really, really well, as they typically get ahead of those things. The question now, and I think we said on this program in October, we said we think we could trade 6,100 on a definitive election outcome. And we got that. So now here we are at 6,100. Do we just revise our numbers higher? No, we think we're on track for 6,500 by the end of next year, assuming that things progress the way that we expect, meaning the base case assumptions we have for our economic forecast for the Fed. That's where the sort of risk is that our forecast on the outcome is not what we expect it to be. And I think this year's next 12 months is going to be just like the last 12 months, where there's uncertainty at times around the growth outcome and the inflation outcome. And
but up 30%.
Well, not up 30, but I mean, the thing is, the last 12 months, we got the earnings forecast exactly right. What we got underestimated was the multiple. And I don't think I was alone in that. I don't recall anyone telling me we were going to trade 22 or 23 times. But then when we get there, everyone just justifies it and says it's okay, we can stay here or even go higher. So look, markets are a little bit diabolical. They trade ahead. And when you're trading the stock market or stocks, you need to think about what's going to be happening in 6 months, not what's happening today. And I think the first half of next year is where the uncertainty probably is going to increase. And then by the second half of next year, things could clear. So it's going to be another, I think, volatile year, plenty of trading opportunity, plenty of dispersion in the stock market. That's what we kind of focus on, what to own, not how much to own. And that's the game. That's the game that we play.
Well, let's talk through some of that volatility, because there's the absolute level, right? 6,500 year-end 2025. It feels like a lot of Wall Street has coalesced around that number. But what does the path to get there look like? What do you see the road being over the next 12 months? So
that assumes that the economy stays sort of, below trend growth, but healthy, sort of 2% real. Inflation continues to climb down, but not, go in a way where it's deflationary. So you have 4.5% nominal GDP growth, which gets you 10% earnings growth. There'll be some operating leverage, and then the multiple comes down a little bit, but not as much as what we would have thought this year. Because look, that's where we are. It's very hard to get the multiple to come down if the Fed's cutting rates and you have above trend earnings growth, and that's what we're forecasting. Once again, assuming soft landing. Okay, inflation continues to come down, and the Fed can cut. I would say the biggest risk in that outcome is on the inflation side. We're seeing inflation pick up again because, look, let's be honest, financial conditions are very loose again. Some of that's the market itself. We have now animal spirits picking up because of the election outcome, and people are excited. That excitement has a negative consequence, which is that all of a sudden inflation starts to pick up again, and maybe the Fed can't cut. That, to me, is probably the biggest risk to the multiple.
That the Fed can't cut.
As much as people are anticipating.
Well, it's a big week for central banks, headlined by the Fed, which is widely expected to deliver a quarter-point rate cut on Wednesday. Meanwhile, markets and economists think the Bank of Japan will hold steady on Thursday, and there are plenty more as well. There's Bank of England and some of the Scandi banks. But for more, let's bring in Bloomberg MLive strategist Mark Cranfield. Mark, I've been paying close attention to what's been happening in fixed income, and I think it's really interesting that we've seen such an upward push of yields over the course of the last week, up 20 basis points or so. How much do you think that is a reflection of expectations going into the Fed this week?
Yeah, I think it's got a lot to do with what people are thinking they're going to hear from Jerome Powell in terms of the guidance for 2025. So if you look at this meeting is that we're probably going to lower interest rates. There's no big surprise there. Markets price for 25 basis points cut. But where the chance for the volatility in the market is what happens when Jerome Powell speaks in the press conference afterwards and gives investors a good idea of what to expect for next year. The Fed will also be refreshing its dot plots as well. And there is certainly a risk that they raise the lower end of the dot plots to show higher interest rates for next year than they currently do at the moment. And that's because of the potential for inflationary policies next year. Obviously, the Federal Reserve has been a bit reluctant to address new policies that may come in from the Donald Trump administration when they don't know exactly what they're going to be. But they must by now realize, as Bill Dudley wrote on Bloomberg last week, that they can see that tax cuts are coming, and that's obviously got an inflationary risk as well. And some of the other factors which are likely to be put in place will stimulate the economy at a time when the American economy is already running pretty strongly anyway. So upside risks to inflation are most likely to appear. The bond market is starting to prepare for it, but there could be more to come as well, particularly if the Federal Reserve signals that it's going to pause for quite a long period.
Yeah. Mark, you penned a piece this morning saying yen traders haven't priced for a surprisingly dovish Bank of Japan. There's only 4 basis points of rate hike probability priced in. Why do you say that?
Well, there's become a bit of a consensus view in the markets at the moment between traders and economists that the Bank of Japan is going to defer. They're not going to do anything at the meeting this week, but they are going to signal that January is a live meeting, and most likely they will raise interest rates at the January meeting. But in the meantime, the Japanese government is having a lot of trouble pushing through its new budget. The situation there is a pretty dicey one because there is a minority government in a sense. Also, if you look at the global situation where there could be tariffs coming, Japan has been warned that it may be in the line to be hit by some tariffs as well. So all of those things are making the picture more complicated. The thing that traders are not really pricing for is the fact that the Bank of Japan not only doesn't raise interest rates this time, but then says that they can't really see a clear window for when they can do it next year. They may even push it further into the second quarter of next year, not the first quarter. And that could be pretty bad for the yen.
Well, yeah, that certainly would be a dovish surprise to your point. Life strategist Mark Cranfield, thank you so much for the overview. All right, that is it for the first hour of Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for the second hour as Jennifer Zabazaja joins me from Johannesburg. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Israel's cabinet approves a plan to double the population in the occupied Golan Heights. Qatar, Saudi Arabia, and the UAE voiced their condemnation. South Korea's currency and stocks little changed today after President Yoon's impeachment, suggesting investors are worried the turmoil is not yet over. Plus, China's retail sales posting a surprise slowdown in November, rising just 3% on year, well below economists' forecasts. It is highlighting the urgency for Beijing to find ways to get people spending. Good morning again, everyone, I should say. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai. Very pleased to have the company for the second hour of the show today.
In the last final full week of trading for us, Jumana, and I'm Jennifer Zabazaja in Johannesburg, where it has just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Yeah, no lightening up on the news flow this week, that is for sure. A heavy week of central bank meetings. The Fed on Wednesday. Expectations are that they are going to cut 25 basis points, but the outlook will be interesting. The commentary, the dots, that's going to be key to determine market direction from here. But if we take a look at how some of the futures are reacting today, S&P not doing a whole lot. We are tilting towards the green after somewhat of a subdued session on Friday for Wall Street, but plenty of drivers to watch out for this week, including the Fed's PMI manufacturing numbers as well in focus this afternoon. 10-year yields also continue to push higher. We are about 1 basis point higher today, but 20 basis points higher over the course of last week. We spoke about that with Mark Cranfield towards the end of the first hour of the show, saying that there is, again, a view out there that central banks are going to move more cautiously on interest rate cuts next year, not specific to the Fed, ECB, Bank of England as well, and all of that has meant that yields have started to move higher. Asia Pacific, we talk about the somewhat of a negative handover from Chinese equities overnight, down about 0.3%. Disappointment prevailing there on back of those retail sales figures coming in lower than the market had penciled in, 3% year on year versus 5% expectation. Again, underscoring what the authorities need to do on a fiscal front in 2025. And then Bitcoin, we are at another record high, all-time high, up 1.7% today. So just shy of 105,000 there for Bitcoin. As for Fed market expectations, well, this is the terminal chart just highlighting that we are pricing in a little less than 3 cuts for next year, about 62 basis points in total. Remember, the median dot for next year right now, as it stands, is still priced pricing in 4 rate cuts. The view is that they will be revised upwards to 3 rate cuts next year, but that's still 75 basis points. So there's still pricing in more than what the market is expecting to happen. So unclear where a hawkish surprise could come from as we head into the Fed meeting this week. All right, turning to geopolitics now. Israel's cabinet has approved a plan to encourage demographic growth in the occupied Golan Heights. Prime Minister Netanyahu's office says the plan to double the Golan Heights population comes in light of the war and the new front against Syria. It's been condemned by Saudi Arabia, Qatar, and the UAE, who say it could escalate regional tension. So for more on this, Bloomberg's Dan Williams joins us now from Jerusalem. Dan, many different players have been involved in Syria since the fall of the Assad regime. Israel has played an active role. Now, of course, those comments of the weekend suggesting that the Prime Minister wants to double population growth in Golan Heights has prompted sharp rebuke from many Arab nations in the region. Just walk us through what was announced and how the reaction has been.
Well, the Israeli pledge to encourage population, the expanded population of the strategic plateau, is not in itself new. It's been more than 4 decades since Israel annexed the Golan Heights, and it is regularly called for more Israelis to live there. I think what makes this relevant, important, perhaps salient this time around is what's been going on in Syria, just on the other side in the Syrian interior, where 8 days ago the long-standing Assad regime fell to Syrian rebels. As a result, the Israelis actually sent forces, ground forces, into a buffer zone east of the Golan Heights on a temporary basis, they say, expanding de facto the Golan Heights areas under their control. So I think what's happening now is the reaction to what would otherwise be a fairly rote cabinet statement about demography, about demographic planning, is being read potentially by some players in the Middle East as a plan by Israel effectively to add that land to its annexed Golan Heights territory. This is something that would trouble them, would certainly trouble the new Syrian administration when it arises, when it comes together. And I think that's what you're hearing now.
Dan, let me just ask you a question more broadly about how the Israeli government is viewing this rebel group, HTS, that have been tasked to form the transitional government. Interesting that over the weekend, the U.S. Secretary of State, Antony Blinken, actually did engage with direct conversations with them. We're hearing of some Arab states looking to perhaps reestablish embassies in Damascus. What's Israel's view of the transition government right now in Syria?
I think the Israelis welcomed the fall of Assad. His family, having had Syria under their iron rule for more than half a century, was certainly enemies. Syria was an enemy country. It was part of the so-called Iranian axis running all the way to the Levant. Syria helped Hezbollah, which was until very recently the most potent foe on Israel's borders. There are no tears being wept in Israel for his departure. However, there is concern for what might arise in his place, given the radical Islamist roots of HTS, of many of these rebel groups. So the official line in Israel is wait and see. They're waiting for firm indications from the new future administration of Syria that it would seek peace, or at least a firm, verifiable non-belligerence with Israel. And for the time being, the Israelis are taking action on the ground. I already alluded to the movement, what the Israeli says are a temporary movement, which will last at least months into that buffer zone. The Israelis have also been methodically dismantling, destroying what remains of Assad's military on the ground with almost nightly airstrikes. The Israeli approach is build that government if you want, but we will make sure that you don't have an army to inherit should you choose to go to war with us again when you do finally consolidate power in Syria.
IDF, per the latest figures I saw last week, estimating they've wiped out about 80 to 90% of Syria's military infrastructure. So that is not a number to be scoffed at. Bloomberg's Dan Williams, thank you very much.
To South Korea now. South Korea's stocks gave back early gains following a vote to impeach President Yoon Suk Yeol. Investors shifting focus away from politics and back to the broad economic worries that have plagued the market. For more, let's bring in Bloomberg's Katya Dmitrieva, who's joining us now. So, Katya, we're getting a number of lines and updates this morning, today, about the evolving situation. Give us a sense of what the latest is in this political drama.
Well, political drama is certainly the right way to put it. So after the impeachment of the president, the prime minister has taken over power. That was over the weekend. He's already given a press conference where he's kind of laid out the need to beef up security against North Korea. You'll remember that this is the exact reason the president actually used to impose martial law in the first place, as well as he's also, the former prime minister, now president, has made comments about the need to beef up the economic situation, and especially in preparation for President Trump. So he's talking about watching the markets 24/7. We had heard that from officials in the past. And just now, a few minutes ago, we learned that the first court date would be December 27th. That's for the court to start looking at the impeachment process for President Yoon. Now, from then, it's sort of a waiting game. So usually it takes about 180 days for the courts to reach a verdict. But as history has told us in the past, it could take about half that time or even less. So kind of early next year, we'll get a decision with the court either agreeing with politicians or not. If they don't, President Yoon could get back in power. If they do agree, it could trigger an election.
Katya, what does this mean, though, for President Yoon? He's severely weakened, clearly, losing support. Where does he go from here, just in the interim, until we get an ultimate decision?
Well, he's still in South Korea. We know that he can't leave South Korea, as we heard last week when that ban was imposed, a travel ban. So he'll be staying in the country. And we also know that next week, or actually later this week, he's going to be called in for questioning for a number of these probes. And in the meantime, he's been relieved of his everyday duties. And so he's not making the kind of decisions that he normally would. So he's sort of in the background for now until we get some sort of verdict or from the court, from the Constitutional Court.
All right, Bloomberg's Katya Dmitrieva with the latest there from South Korea. In Hong Kong, though. Katya, thanks so much. Still ahead, hear why Standard Chartered Wealth Management is overweight on stocks and gold heading into 2025. More on their market strategy next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Chinese shares fell, weighing on broader Asian equities after weaker than expected retail sales data showed the world's second biggest economy is still struggling to recover. Meanwhile, traders are also looking ahead to the Fed's rate decision on Wednesday, with markets anticipating a cut. Joining us is Manpreet Gill, Chief Investment Officer, AMEE, at Standard Chartered Wealth Management. So good to have you with us. I know you just published your outlook for 2025. How much is what happens this week with the Fed and all the other central bank meetings going to determine how you see the outlook for global markets next year?
So I think the Fed's going to be obviously quite important. I think this is the last meeting where I think we'll sort of have the first pre-Trump sort of administration Fed cut. So less of a surprise. But I think for 2025, the real test is going to be what happens as we go through, especially the first quarter of the year. Because, look, on one hand, growth argues for obviously, for the pace of rate cuts. We still expect around 3 rate cuts next year. But the key sort of debating point or pivot point will be just how, fiscally stimulatory Trump administration's policies will be, and hence how much room does that leave for the Fed to continue cutting rates.
Yeah.
In our view, we'll continue to get that rate cut pace, but just at a slower pace than what we expected a few months ago.
Yeah, and yet, despite that, and despite the uncertainty, you, per your outlook for next year, are long U.S. equities versus European equities. And I've got to say, so many people I've spoken to the last couple of weeks also have the same view. Are you worried that everyone's thinking the same going into next year?
Well, look, short-term position data, yes. I mean, it's quite possible that especially in the last few weeks, we've got quite a bit of momentum behind that trade. Perhaps we start the year on a slightly softer note, a bit of a healthy pullback. I think our point is a little bit more long-term to say, look, where's the earnings growth ultimately coming from? And I can understand why a lot of people have that view, because when you look at earnings growth for a moment, leave aside economic growth, you ultimately still have expectations of fairly strong earnings growth in the U.S., which is what one might expect when you have a strong economy and potentially more of a tailwind with Trump's policies. equities. And in Europe, it's not yet obvious, what might cause markets and earnings growth, more importantly, to turn the corner.
Yeah.
So beyond short-term position-led rallies, I think we need a bigger picture catalyst.
Yeah, but there's also a valuation play as well. European stocks are looking cheap versus U.S. stocks. Earlier today, we've been talking about Chinese equities, and Chinese equities have rebounded 30% since the lows that we were at in September. Again, a valuation story there, and perhaps some hope about what they're going to do on the fiscal side. So do you not think at some point people may be drawn into just cheaper valuations in some of these jurisdictions?
At some point, yes. But I think it's very hard to say what that some point is. So European equities, for example, we had the same conversation about a year ago to say when you were doing a 2024 outlook that they did look cheap. We never got that catalyst. So it is something that reflects in our sort of 10-year expected returns, but it's just tough to see over the next 3 to 6 months what causes that turn. I think on Chinese equities, we might still get some specific opportunities. I think at the market level, there are still many growth concerns, but we think there will be more stimulus in the pipeline. But for us, taking more focused bets through sectors like either high-yielding SOEs or the Hang Seng technology sector, we think those are slightly more attractive ways to gain exposure.
What about consumption stocks in China, which is sort of the focus of their attention now?
And we think as a mix of sectors, yes. So we're overweight the consumer discretionary sector because if we are likely to get more fiscal stimulus, that's most probably going to be one sector that benefits most directly. But we do think via the onshore market rather than the offshore market. I think it's about getting exposure to that potential stimulus.
Yeah. I see in your report as well that you still like gold too. Gold is an interesting one because we've continued to rally. Some people say it's on back of geopolitical premium, flight to quality, safe haven, a resumption of some central bank buying. But that breakdown, that correlation between real yields and gold seems to have been broken down because we are still in a very positive and high real yield environment in the U.S. Why do you think that is the case?
So you're right. And I think that relationship with real yields, when we looked at the data, seemed to have broken down in 2022. And I think the focus shifted then and still is on central bank demand. And I think that's really what we think will be the main driver. If we get some help from lower yields or risk aversion or any of the other factors, we'd see that as a bonus. But for us, the geopolitical environment doesn't appear to be getting any better.
Yeah.
Potentially risks from a market perspective could, if anything, continue or get worse. And we think that'll keep central banks, as a big tailwind for gold.
Yeah, I remember when Bitcoin became super popular a couple of years ago, people started referring to it as digital gold. And of course, Bitcoin keeps going from strength to strength. But has it actually proved its merit and proved its worth as being a valuable store of currency? Or is it just a tool that essentially is a levered bet on cyclical markets?
I'd be favored to look at it more as a leverage bet on cyclical markets because we looked at those relationships over time. And it's harder to find close relationships with gold, especially over longer periods, even if you take currencies, cryptos like Bitcoin, which have the longest history, which admittedly isn't that long.
Yeah.
But you find the closest relationship with the riskiest assets, like risk appetite, U.S. small caps. So that's, from a portfolio perspective, at least the bucket we'd place it in.
Yeah. What do you think happens to the USD next year? I was just speaking to one of our colleagues. The dollar has been rallying for a 10 out of the past 11 weeks, probably due for a bit of a pullback. But how do you see things in 2025?
Most probably due a bit of a pullback. But I think it's interesting that despite all the bullish talk of the US dollar over the past, since the US election, really, we haven't really seen the dollar index break, significantly above the range we've been in for about 18 to 24 months. So it's quite possible that the floor has moved up and we end up with a narrower but higher range. But in our view, all of what we've heard so far hasn't really brought the dollar, into a significantly higher range. The bias is most probably to look for excuses to eventually turn a little bit lower. Tariffs, I think, are the real main uncertainty markets are looking to get past.
Yeah, very fair. Also, highly dependent on what happens with other currencies as well. Let's not forget it doesn't operate in a silo. Thank you so much for joining us today and for sharing your views on 2025. Manpreet Gill, Chief Investment Officer at Standard Chartered Wealth Management. Thank you very much. Well, coming up, not shopping. China's retail sales growth unexpectedly weakened last month. More details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. China's retail sales growth unexpectedly weakened last month, highlighting the urgency for Beijing to further encourage residents to spend. Retail sales rose 3% from a year ago, significantly below forecasts for 5% growth. Industrial output, though, increased in line with estimates. Over the weekend, a PBOC official told state media that China will cut interest rates and the reserve requirement ratio in a timely manner next year. And key Chinese economic meetings this month have revealed that officials are planning to make stimulating demand and consumption their top priority in 2025. That will be welcome news for luxury brands who have seen sales slide and fortunes fade as shoppers tighten their belts. Let's get more from our China correspondent, Min Lo.
This 5-story Louis Vuitton flagship store in Beijing was supposed to open its doors to shoppers in early 2024. LVMH CEO Bernard Arnault told Bloomberg he was optimistic about the group's growth in its largest market.
I am always optimistic, and the people have often concerns which are not materialized.
But now, sources say the store may not open until as late as next year. The slow progress is symbolic of the challenges European luxury brands face in China. LVMH shares have plummeted since the start of 2024, revealing the scale of the slump in demand from Chinese consumers. Another luxury group, Kering, warned that its annual profit will fall to the lowest level since 2016 due to weak Chinese demand for designer bags and clothes. Prestigious watch brands like Richemont, the group behind Vacheron Constantin and IWC, and Swatch Group, owner of Omega, are also affected. Swatch shares tumbled this year after sales in China, which account for about a third of its revenue, fell sharply.
Many watch manufacturers are really dependent on China, generating 40-50% of their sales.
This pullback in lavish spending is hitting some of the world's richest. LVMH CEO Bernard Arnault's fortune tumbled from the top spot in the Bloomberg Billionaires Index. Founder of Kering, François Pinault, fell out of the global 100 richest. Shoppers in the world's second largest economy are shying away from excess buying as Beijing grapples with low domestic consumption and a shaky property market. President Xi Jinping's government has rolled out a series of stimulus measures to boost sentiment. Bloomberg Intelligence says China's luxury goods sales and the downturn in the industry may reverse in the second half of 2025 if Beijing continues to roll out economic support. Min Lo, Bloomberg News, Hong Kong.
Now for a look at some of the other stories we're following today. Georgia has selected Mikhail Kavelashvili as its next president as protests backed by the current head of state continue over the government's turn away from the West towards Moscow. The former footballer and lawmaker for the ruling Georgian Dream Party that won disputed parliamentary elections in October was the sole candidate for the largely ceremonial post. Australia's markets watchdog is suing HSBC Australia for failing to protect customers who lost millions of dollars in scams. The Australian Securities and Investments Commission says the bank received about 950 reports of unauthorized transactions over a 4.5-year period, resulting in customer losses of almost 15 million USD. HSBC says protecting customers from scammers remains a top priority. An appeals court has rejected TikTok's bid to delay a U.S. ban set for the day before President Trump is inaugurated. The app and its Chinese-based parent, ByteDance, now plan to take their case to the U.S. Supreme Court. They're also hopeful of an intervention from the incoming Trump administration. And here's the picture for equities. As we get closer and closer to the European Open, S&P futures leaning towards the green, marginally higher, NASDAQ basically flat, Dow Jones similar, Euro Stoxx futures tilting towards the red, down 8 basis points. And there the focus is going to be on developments in France. We've been speaking about Moody's surprising with a downgrade of the French sovereign credit rating late on Friday, that the outlook is stable. And then also the appointment of a new Prime Minister, Bayrou, in the afternoon on Friday as well. So how the market takes that will be on the agenda this afternoon when European markets get going. And this builds on from a somewhat of a moderately positive handover on Friday. Euro stocks futures ended the day up 5 basis points. But looking ahead, it's going to be a very busy week in terms of central banks. We've spoken a lot about what is priced in for the Fed, but then we get the Bank of England on Thursday. They're expected to keep rates on hold, but again, language there will be important. And then Bank of Japan coming up later in the week as well. No change expected too. All right, coming up, Mali, Niger and Burkina Faso have been given a 6-month grace period to reconsider leaving a key economic grouping in West Africa. We'll focus on the politics of the region next. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. The U.S. says direct talks have taken place with the rebel group that took power in Syria to discuss its political transition. Peace talks in Angola between the DRC and Rwanda collapse over disagreements on negotiating with the M23 rebel group. And Moody's cuts France's credit rating, citing financial weakness and political gridlock. That as new French Prime Minister François Bayrou is set to meet with far-right leader Marine Le Pen later today. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Shumana. Jumped in too soon. I'm Shumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa, where both of us are very keen to get going.
We are powering through to the end of the year, and quite a year it's been. Jumana, let's take a look, though, at where markets are positioned ahead of the last full week of trading for the markets. Listen, it is a packed week, even though many people are counting down perhaps till the end of the year. We do have a number of central bank meetings that we're watching out for. That is, of course, including the Federal Reserve. We have the Bank of England. We also have the Bank of Japan. And if we just take a look at where we're positioned right now, U.S. equities not doing too much, as you can see, but still S&P futures over that 6,000 print, actually. But we did see U.S. equities, the S&P actually closing Friday largely unchanged, but it did notch a weekly decline after 3 straight weeks of gains. So perhaps people taking a bit of a pause there. When we look at Bitcoin, it's touching another all-time high. Look at that, over 104,000, up just 1.89%. The new record did follow some news that we got from software maker MicroStrategy. They did say that they will be joining the NASDAQ, but clearly Bitcoin continuing to have some upward run. The dollar, though, not so much, stalling a bit ahead of those central bank decisions that we will get. I know you were just speaking with Manpreet Gill about potentially a pullback that we'll see in the dollar. Potentially we'll see that, but right now down just about 0.1% after rising 1% in the past 6 sessions. And we're also paying close attention to French bonds, as we have up there. Treasuries ticking slightly higher, though. French bonds are in focus, though, with the 10-year bonds slipping ever so slightly. We did get that news that Moody's did cut the country's sovereign credit rating, further highlighting some challenges ahead for the new prime minister who is there. And let's just stick on 10-year bonds and zero in on the U.S., because we are seeing treasuries tick ever so higher right now. 10-year yields are coming down ahead of the rate decision on Wednesday. But still, if you can see on this chart, last week treasuries fell Friday to conclude one of their worst weeks this year, and we're seeing yield shifts continue to steepen the yield curve to the highest since late November. But that just to look at some of the downside and the struggle that we've seen for yields over the past few months. Now, let's turn back to the region here. West African leaders have given Mali, Niger and Burkina Faso more time to reconsider their split from the ECOWAS regional economic bloc in a final attempt to avoid its fracture. The president of the ECOWAS Commission says the nations will have a 6-month grace period following a summit in Nigeria's capital, Abuja, over the weekend. Let's bring in Beverly Ochieng. She is a senior analyst for Francophone Africa at Control Risks. Beverly, great to get you on to the show this morning. Listen, a lot of news coming from this event over the weekend. It seems like traditional diplomacy did not work to get these states or these countries back into the ECOWAS group. Punitive measures are not working. Is there anything that ECOWAS can do to unite these countries again?
I mean, at this point, they're only left to negotiations and that grace period to allow the Sahel Alliance to reconsider their thinking. But given the sanctions that had been imposed on Mali, for instance, after the coup in 2021, and then the threat of a military invasion once Niger had carried out the coup in July 2023, they have had a hardline stance. And the Sahel junta leaders, ever since they formed the Alliance of Sahel States in September 2023, have repeatedly said there's no turning back on going into ECOWAS. ECOWAS then tried to get two Pan-Africanist presidents, that's Togo's Florent Nassibé and even Senegal's Faye, to be able to negotiate between the two blocks now, between the two blocks, and that hasn't been as successful. The AES itself has said that they will allow people from ECOWAS free movement, trade will be still liberalized, and they're trying to bank on the fact that they're establishing a fully fledged regional bloc. They want economic interests to be taken care of, given that they've had a very bad reputation so far over the military coups, the insurgency, and tensions with ECOWAS. But the difference this time is that ECOWAS AES tensions might just have reduced. We've seen acrimony over the last couple of years since 2020 when the coup in Mali took place, the sanctions were imposed, the military intervention was being intervened. So now it might be a bit easier for negotiations to take place.
Beverly, we did hear ECOWAS, though, call a splitting of the group disheartening. Can you just contextualize the significance if we do see these two blocs remaining separate? I mean, what is at stake here for all of these countries and also for West Africa as a whole?
I mean, first of all, the political clout of the Economic Community of West African States has taken quite a beating over the last couple of years since the military coups took place, and they seem to have been caught flat-footed, and some of their actions and interventions politically have not gone far to stall further military coups. That's the first thing. Economically, ECOWAS would be losing more than 70 million people within their economic bloc. That is Mali, Burkina Faso, and Niger having populations of just over 20 million. And that potential loss does cut off the circulation of goods and services in the event that tariffs and visa regulations have to be imposed, because that just means additional administrative caps. It also means that it will be difficult to carry out intra-regional trade. There's also been an increase in tensions, intra-country tensions, as a result of this ECOWAS AES split. Burkina Faso and Cote d'Ivoire have been engaged in diplomatic spats over contention that they are trying to destabilize each other. ECOWAS hasn't quite intervened with that or even sought mediation, but there has been some quiet mediation taking place with Togo. Benin and Niger have also had long-running tensions that have had an impact on the pipeline and uranium export. So you can see that trade is being compromised, and at the same time, political tensions are increasing between countries, but not all-out confrontations, just concerns around what that means for future negotiations on relationship between the AES and ECOWAS.
I also want to talk about the relationship between this area and France and Europe as well, because they're still united with the CFA franc currency. And so, I mean, does this further weaken France's role in the region? That is something that the AES was concerned that ECOWAS was not taking seriously. What does this do for that relationship?
I mean, politically for France, they have essentially lost most of the Sahel. And recently we've just seen, even though it's not part of the bloc, French forces leaving Chad, and that's, a big foothold that it has lost. French forces have left Mali, Burkina Faso, and Niger over the last 3-4 years. And now you're seeing that there's contention about the CFA franc. Now, the 3 Sahel countries don't intend to leave that bloc. It's a slightly different bloc, the WEAMO, which has 8 countries, mostly Francophone, within West Africa. The CFA franc gives them some stability because it is pegged to the euro. It makes sure that they have foreign currency reserves. It makes sure that there is an inflow of cash and a way of trading within the region, both for those countries, but also for businesses engaged in that region. It is not likely that the AES will leave the CFA zone, despite that contentious relationship with France. But they are trying to, over the years, of course, it'll take a long time, take steps to possibly establish their own currency. ECOWAS itself is trying to progress with what it's been calling the ECHO since 2019 as a way of ensuring that they have their own financial resilience outside of France and outside of external markets, and as a way of also unifying that unique West African bloc, which has had the most resilience over the years, but now has been tested as a result of military rule in just some of its former members.
So then, Beverly, when we look at 2025, what comes next? Could Senegal's president potentially resolve this standing position that these countries are taking?
it is unlikely that they're going to change their minds unless there is a change of government in those three countries, a potential civilian government that might be more amenable, which is possibly why ECOWAS is giving them that leg room of 6 months. It's a long period of time. Mali is planning to hold elections, for instance, at some point next year, either mid to the end of the year. They might change their minds if there's a change of leadership. But as things stand, Faye and the Togolese president will mostly make negotiations less acrimonious and ensure that there are fair terms for an eventual exit of the AES, and that long-term relations between these two blocs continue to be beneficial, even though they have emerged as a result of acrimony.
Right. It's a fascinating story. Beverly Ochieng, really great to get your insights. Senior analyst for Francophone Africa at Control Risk, joining us this morning. And also, the Democratic Republic of Congo says peace talks with Rwanda to end an insurgency in Congo's east have collapsed. The talks, scheduled for Sunday, fell apart after Congo rejected a Rwandan demand that it negotiate directly with the rebel group known as M23. More than 7 million people have been displaced by the violence in the region.
And U.S. Secretary of State Antony Blinken says direct talks have taken place with the rebel group that took power in Syria. Blinken says U.S. officials spoke directly with Hayat Tahrir al-Sham as well as other groups on a set of principles the U.S. and Arab partners want to guide Syria's political transition. Meanwhile, Syrian rebel leader Ahmed al-Shara and the UN Special Envoy for Syria have also discussed reconsidering a 2015 Security Council resolution outlining a roadmap for the country's political transition. For more on this, Bloomberg's Paul Wallace joins me now. So interesting to see that the U.S. Secretary of State has actually engaged with the leaders of HTS and this new transition government. They've talked about a roadmap for governance. What do we know about this roadmap, Paul?
Hi, Jumana. Essentially, this underscores how Western governments are trying to reach out to this group, Hayat Tahrir al-Sham, HTS, and do whatever they can to ensure a smooth transition to whatever government emerges in Syria. The UK has also begun direct contacts with HTS and other countries too. In the US, broadly, they're on the same page. What they want, and this includes the US, is for HTS to guarantee the rights of minority ethnic and religious groups in the country. It doesn't want Syrian territory to be used to undermine neighboring states like Israel, which means that they don't want Iranian proxy militias like Hezbollah to be able to use Syrian territory for their purposes. And they also want HTS to allow aid to be distributed across the country to help the population exhausted by around 13 years of civil war. However, HTS is still designated a terrorist organization by the US and the UK, so they're having to tread very carefully with how they do this.
Yeah, well, at least the diplomatic channels are now open, so a step in the right direction. Just as a follow-on from that, Turkey has emerged, President Erdogan has emerged as one of the biggest power brokers in the region right now, specifically as it pertains to Syria. There were some reports of the weekend suggesting that Turkey have actually come to an agreement with HTS over the dismantling of some of those Kurdish forces that are situated up in the northeastern part of Syria. What do we know about the likelihood of that actually happening, Paul?
Well, there's a lot still going on in the north of Syria. The country is far from peaceful as a whole, and some Turkish-backed forces are going up against Kurdish forces in northern towns. What Turkey is trying to do is get these Kurdish forces pushed eastwards beyond the Euphrates River. Essentially, Turkey doesn't want Kurdish groups to set up any kind of sort of semi-autonomous territory on Turkey's border. So President Erdogan is very much trying to use the downfall of Assad to achieve that military aim, which has been a long-term goal of his.
Yep. well, you have to see how that's going to play out, because those same Kurdish fighters, YPG, have been working alongside the U.S. troop stations in that part of the country against ISIS. So all of this becomes a massive diplomatic web that is yet to unfold in the coming weeks. Bloomberg Paul Wallace in Istanbul today. Thank you so much. Now, coming up, François Bayrou is to hold discussions with far-right leader Marine Le Pen later today. The latest on the French Prime Minister and French politics coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. France's new prime minister is to hold discussions with far-right leader Marine Le Pen later today. The meeting is part of François Bayrou's efforts to form a government that can push a budget through the divided French parliament. Bloomberg's Stephen Carroll joins us with more. Stephen, Marine Le Pen is emerging as perhaps the key kingmaker in terms of the next government formation and the longevity, perhaps, of the new Prime Minister Bayrou. What do you think he's hoping to get out of these meetings with her today?
Well, look, he's not just meeting with the far right, he's meeting actually all of the political parties in order of their size of grouping in the National Assembly. So Marine Le Pen and Jordan Bardella are up first from the far right National Rally. And really what François Bayrou is trying to convince them to is not to support another motion of no confidence in his government based on the budget that he's going to now have to come up with after the 2025 one has essentially disappeared following the fall of the government of Michel Barnier. So it's a discussion that's really trying to, I suppose, identify where there can be elements of compromise. We know that that was part of the downfall of Michel Barnier, as he ceded ground to Marine Le Pen, who then decided in the end to vote for the no confidence motion anyway. So really what François Bayrou is trying to do is avoid a repeat of that. So far, all of the parties have said they will attend these meetings with François Bayrou, except for the far left France Unbowed party. They've said that they won't go, but the others will be lining up with their list of demands for the new Prime Minister. Of course, we haven't got the full composition of the government yet. That's part of the tasks that François Bayrou will have to undertake, but the budget will be primary in these discussions that are kicking off this morning.
Yep, and how closely are they going to be keeping an eye on the credit rating decisions? On Friday, Moody's cut France's credit rating to the same level as S&P and Moody's. Some people are saying or observing that they now have the same credit rating as Saudi Arabia. What is the outlook for the fiscal situation from here?
I mean, look, the longer this budget drama drags on, the more difficult things get for France's budget. Remember, the previous plan under Michel Barnier was meant to bring down the deficit to 5% next year, still above the 3% required by EU budget rules. So the longer that they are without a budget, and the law to roll over the 2024 budget into 2025 is going through Parliament this week, the more difficult that situation gets. There are key tax and spending decisions which have now been delayed. They're certainly not going to help to bring down the budget deficit. And every party is going to be coming into these discussions with François Bayrou with their own requirements and requests as to what they want. We've heard in the first interview that François Bayrou gave to a French newspaper over the weekend that he plans to be working with the Elysée. He sees his role as being complementary to that of Emmanuel Macron. But of course, the question will be is that how long the markets will be patient for a solution on this issue as well. Macron has said that he wants a budget in place by the early weeks of the new year. That's a big ask, given that the financial situation can only get worse in the short term if there is no real control over France's tax and spending plans. So it's a difficult set of negotiations ahead.
Yeah. Bloomberg Stephen Carroll, thank you very much. And he's going to hop on to host his own show now. So tune in if you are in London. Now, coming up, Germany in focus. Chancellor Olaf Scholz faces a confidence vote later today. The details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. German Chancellor Olaf Scholz is facing a confidence vote later today, a move paving the way for a possible snap election early next year. This as Germany's economy continues to struggle. GDP is now 5% smaller than it would have been if the pre-pandemic growth trend had been maintained. For more on this, let's bring in Bloomberg's Oliver Crook, who's joining us from Berlin. So, Ollie, take us through what exactly happens today and how that sets up for the election that we'll get in 2025.
Yeah, Jen, sort of tracing the genealogy of how we got here, it's been sort of in the very beginning of when this government was elected back in 2021, this sort of coalition, so-called traffic light coalitions of the Greens, the SPD, and the FDP, and really had a lot of different sort of priorities, but that was sort of papered over by the crisis, the invasion of Ukraine. They managed to get a lot of things done in very short order at the very beginning, but then all of the issues started emerging, and it really transpired into the budget, and that is where the government collapsed when Olaf Scholz fired the finance minister on November the 6th, hours after Donald Trump was elected president, and that set the way for this no confidence vote, which is now being held today in the Bundestag at 1 p.m. So what happens is Olaf Scholz, the chancellor, goes before the parliament. He gives a 25-minute speech. Then there is 2 hours of debate that will follow that. Then there will be the vote held, and we'll have the result, the roll call result, by 4 p.m. And what is widely expected, as is sort of part of the procedure here, is that he will lose the vote of no confidence. That will pave the way for the elections on February the 23rd. And if you look at the polls right now, nothing has changed too dramatically. You still have the CDU, the center-right, leading at 31%, the AfD, Alternative for Deutschland, the far-right at 19%, and then the SPD, Scholz's party, to suffer really a significant blow, down at 18%, which makes it a very sort of likely outcome of a CDU, center-right, and center-left SPD coalition government.
Wow. And Oliver, we've been talking for months about Germany's stagnation and really how this is playing into the situation in the country there. How could this potentially play out in the campaign? Will we hear, I mean, we should expect to hear, right, from all of these candidates about just how detrimental we've seen the economy deteriorate over the past few months?
Absolutely. I mean, I think that this is the sort of center of the problem with the sort of the election here is, and I was at the center of the budget because there were very conflicting ideas with this government about how to solve this problem. On the one hand, you have Olaf Scholz and the Greens who say that basically this part of the Constitution that limits our borrowing, the so-called debt brake, that is a sort of institution for the past. That needs to be reformed. Really major changes need to be made to this economy, and that needs to be debt financed. That is really at the center of the debate, where you have on the right the FDP, the CDU, who are really sort of standing in opposition to that, but really going into that sort of big take that we put out today, and some really interesting data here that really puts some context around the damage that has been done to the German economy. I mean, 5 percentage points of growth have been lost since the pandemic because of the trend line basically not coming back, and that is down to sort of structural issues with energy pricing. And we see it sort of the front line was always heavy industry, then it was going to be sort of the chemical sector, but we're seeing it now, Jen, as we talk about all the time, the auto sector. We have talked about in the Fortune 500 companies in Germany, 60,000 job cuts since the beginning of this year. That is sort of going out of the abstract, out of the PMI charts, into the reality of this economy, and people are hurting and feeling it at home. Well, the consequence of that often is political and often goes to the sort of extremes, which is why you're seeing the far right do so well right now in Germany. Almost 20% of the vote, the sort of highest they've ever done in any election.
Wow, we know you'll stay on top of that. Bloomberg's Oliver Crook in Berlin. Thanks so much, Oliver.
Well, we managed to squeeze it all in, Jen. So much going on today and this week with the central banks in focus. Also, some of the political stories that we're keeping a close eye on in Europe and in Africa as well, with that important summit taking place. This is the picture for futures. Not doing a whole lot, though. Euro stocks futures, the only ones that are trading in the red, but only marginally so, down about 0.1%. But that is it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai with Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe. This is Bloomberg.